Good morning and welcome all to Almus Market Mornings. This is your host Shikhar Garg bringing to you your daily dose of financial update. Now, it was a day of three central bankers speaking at the IMF discussion forum, and US Fed Chairman Jerome Powell, who offered a signpost of aggressive rate hikes this year, also said that with inflation running roughly three times the Fed's 2% target, it was appropriate to be moving a little more quickly. While many hawks from the Fed have been calling for faster pace of rate hikes for several weeks now, coming from the chairman, it has seen the investor running to unload stocks in the US session. On the contrary, Bank of England Governor Andrew Bailey said on Thursday the British central bank was walking a tight line, as all the other central banks are tackling inflation and avoiding a recession, with the strength of labor market a key question right now for them. The ECB may need to cut its growth outlook further as fallout of Russia's war in Ukraine weighs on the household and businesses, even though there was a good confidence number released by one of the European Union's nation. The ECB President Christine Lagarde said risks were skewed to downside for growth, so there might be more cuts coming in. When you read these statements, you know why dollar still remains strong even after more than a year of rally. Japanese Finmin discussion with Janet Yellen did not throw much on the next course of action, but it seems that he was more focusing on impressing on the G7 that the recent moves were due fundamentals. Speaking on the local currency, in the short term, rupee lacks strong directional tendency, hemmed in by selling by the PSU banks above 76.50 levels, exporters hedging while downside seen solid with oil companies buying, as well as the FII, who continues to be the sellers of Indian stock markets. In view of the potential inflow from the LIC IPO, a decision about which is likely soon, downside from the dollar looks more vulnerable, although it should be temporary, and the undercurrent based on broader fundamentals and the DXY trend, we expect pressure for a weak rupee eventually to continue. Now, these are more on the fundamental side, but there's also one striking thing that we need to focus on, as we've all been talking about a lot of inversion. US 5-year Treasury yields exceeded the 3% mark, whereas the 10 and 30 still remains below 3%. Some inversion again in place, whereas commonly watched 10-2 spreads continue to be around 25 basis points. Even the Indian 10-year GSEC yields closed at 7.15, which is 5 basis pips higher than the previous close. So market would be closely watching RBI's action and the government securities auction for the direction of yields today. Now, these are all the macro factors, but as we promised yesterday that we'll be giving you much crisper levels to act on, we have Nikunj Bharakhda coming in for the technical sessions. So guys, let's listen to what the technicals are saying.
Thanks, Shikhar. So this is Nikunj Bharakhda. I'll be taking you through dollar index, dollar gold, euro dollar, and dollar rupee technical levels. So if there is one thing which is graphically represented for all the markets in financial markets, that is technical analysis. So talking about dollar index, we have seen that dollar index has been moving swiftly from May 2021 till now, from 89.5 levels to 101, which was just touched this week. Basically, we feel that 101 is a very strong level from wherein it should reverse. But today being Friday and the weekly close, if at all dollar rupee is closing below 99.5, possibly we are again moving towards 97.5. So why I'm talking about dollar indexes, because it will have some impact on dollar rupee, which is our mother currency, and the 97.5 levels may drag dollar rupee down towards 75.80, 75.60 levels. So these are the levels we'll have to watch out for, whether dollar index is closing above 101 or it is closing below 99.5. If at all it is closing somewhere around this level, possibly we'll look out for next week where it is closing. Now talking about gold, gold has been moving in a very wild fashion since last 1.5 weeks. And we have seen that it has almost touched 2000 levels, and now it is trading at 1948. For short-term buyers, I think 1940 is a good level to enter from the long side. And if at all it dips to 1910, that would be another level to add to the longs. The stops for the longs will be 1888. And on the higher side, if at all it is closing about 2000 level, possibly we are moving towards 2025 and beyond that. Now, taking you through dollar rupee, we believe that 76.55 is a very strong barrier. And if at all dollar rupee is closing above that level, possibly we are moving towards the new high near 77 plus levels. On the lower side, I think 75.10 and 75.80, these are the levels wherein importers can hedge their short-term positions. But as I said, 76.55 is a stops for all the importers, and exporters can wait for 77 plus levels for the time to come. Lastly, talking about the euro dollar, we still believe that euro dollar is in the down move. 1.0940, 1.0950 is a level to go short. On the lower side, the previous swing low, which was around in March 2020 of 1.0640, that is a level what we are watching out for. And if at all it is closing below that level, possibly even 1.05 we may see. So that is all from my side.
Okay, wonderful, Nikunj. That was quite crisp as we promised. And guys, as Nikunj mentioned, it's Friday. So let's thank God it's Friday, because now with all these turbulence, we get some bit of a breather, at least in the weekend. We'll come back again on Monday and update you on the further changes in the financial markets. Till then, goodbye, take care, manage your risk.